More capital is being dumped into the data center and basically Bitcoin mining scene, cryptocurrency mining scene, starting with Australian data center startup Arkon, who expanded to the US with $26 million in fresh funding. CEO Joshua Payne said he expects the acquisition of a data center in Hannibal, Ohio to be the first of several over the next year. Arkon Energy, a data center infrastructure provider based in Melbourne, Australia, is expanding to the US with the acquisition of a site in Hannibal, Ohio. The company, which operates data centers that host Bitcoin mining equipment, also raised $26 million in fresh capital from Santon Capital Partners, which it intends to use to fund an aggressive expansion into North America, according to an announcement shared with CoinDesk on Tuesday. That's on top of the $28 million it raised in November when it bought the Hydrocraft AS, a renewable energy-based data center in Norway. The acquisition is likely to be the first of several over the next year, CEO Joshua Payne said in the statement. The data center in Ohio is designed for a capacity of 100 megawatts and is expected to add up to 3.3 exahash per second to the firm's hash rate by the end of 2023. Arkon said it hopes the facility will offer a predictable revenue stream by providing server hosting services to Bitcoin mining firms. Bitcoin mining firms felt the pain over the last year's crypto bear market as they were squeezed between falling valuations and high electricity costs, with some firms going bankrupt as a result. Further uncertainty lies ahead with Bitcoin's next halving, now less than a year away, which will reduce rewards for mining blocks and so challenge firms' profit margins further. Quote, raising capital in the current climate, particularly amidst a crypto downturn and increasing regulatory scrutiny, was indeed a challenge, end quote, Payne said. However, the uncertain market landscape also presents very well-priced buying opportunities for those that are able to navigate the storm and protect the downside. And I mean, that's it right there. It's right in front of your face. What are these companies doing? They're starting to prep for the next bull run. They're starting to get they realize that they can get dirt cheap prices on equipment, down to like $12 per terahash, even cheaper if you go up on your minimum order quantity. And that's really getting you into the position of having a really large step up to anybody else that starts trying to accumulate equipment after the halving, at least in my humble opinion. And they're not the only one. Bitcoin miner CleanSpark is to buy 2 Georgia facilities for $9.3 million. The new facilities are expected to add just under 1 exahash to CleanSpark's hash rate. NASDAQ-listed Bitcoin mining firm CleanSpark has agreed to acquire 2 facilities in Dalton, Georgia for $9.3 million in cash. The facilities will host over 6,000 Bitmain Antminer S19 XPs and S19J Pro Plus S, and are expected to add just under 1 exahash per second. By the way, these are hydros, and these are not hydros. So I don't know why this is the picture, but I mean, it is what it is, right? Just in case anybody's getting confused, these rigs are not the ones that are shown in the picture. CleanSpark's aim to have 16 exahash of power by the end of 2023, which the acquisition of these facilities will ensure they have more than enough infrastructure to reach, said CEO Zach Bradford. Its previous big move was the purchase of 45,000 brand new new Bitmain Antminer S19 XPs for $144.9 million in April. Quote, we continue to make use of opportunities created by current market conditions to prepare for next year's Bitcoin halving, said CEO Gary A. Vecchiarelli. With the industry still reeling from the sharp fall in Bitcoin's valuation last year, combined with rising costs from high electricity prices, mining firms are looking toward Bitcoin's next halving, now less than a year away, which will reduce rewards for mining blocks and challenge their profit margins even more. Now, in the past, the profit margins haven't been challenged because the profit starts to significantly increase. And most of the miners that had, in my humble opinion, leveraged too much debt have been pushed out. So I think we're kind of back to baseline on traditional cycles, or the traditional halving cycle. And I think that we'll still see that play out at least one more time. Maybe 2 more times, It's really hard to tell. Also, we really don't know the direction of ordinals at this point. If ordinals end up being a bull run push like NFTs on Ethereum were, we could start to see some craziness begin to happen over the whole market. Because remember, a rising tide raises all ships, and ordinals are on Bitcoin. So if that starts to drive the value of Bitcoin and, of course, the profitability of mining up astronomically, then I think we'll see quite a bit of a different market this time around than what we would normally predict, right? If we went purely off of traditional halving cycle, we would expect Bitcoin 6 months to a year after the next halving in April to be somewhere around $210,000. But with all of these other variables getting thrown in, it should be quite interesting and unpredictable, I think, to say the least. It could go way above that, for example, right? And it's going to be interesting. Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofatech.locals.com, where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.